Hello, this is the lecture on the topic of funding of convention venues. It's an important element that we need to consider here as we start the process of discussing these venues. As I mentioned in the first day of class, there are public funded venues which are significantly funded by governments of various aspects, and in Asia we can look at Singapore, Hong Kong, Indonesia, Thailand, Philippines, Japan. All have venues that are publicly funded in some fashion. But as I mentioned also, in Asia there's more of a prevalence in the large convention and exhibition facilities of privately funded and owned facilities, such as Suntec in Singapore. And then, of course, if we start thinking about major convention hotels, like, say, the Venetian Hotel in Macau, for example, then we're also talking about private funding there as well. Now, public investments on venues, the positive aspect of that is that they are often built to help things like regeneration of a downtown, revitalizing traditional resorts. There's an example of that up in Zhuhai that we went to for our faculty retreat last summer, when the facility that's run by Metro Park Hotels was looking to add on to what was originally there. They built meeting space, an amusement park, and other things as well. They can be a support for other business and technology and research, but I want to make a point here in that what they are not is they're not facilities built by the government to bring people, buyers, let's say, to the city to do business with the various manufacturers or producers of various products within the city itself. Now that does exist, and that was the model of the Canton Fair that we'll talk more about when we get into the Greater China development aspect. But that's not the norm, and most of the time the facility being used is not being used by local manufacturing operations. Not to say that some wouldn't be there and so on, but that's not the main catalyst. What we're saying is they're bringing in trade technology into the area where business is being done by people both from the area and outside of the area in the process within the region, whatever it may be. And another reason is to really set the stage that that particular destination, whether it's a first tier, second tier, third tier type city, is mature enough to be able to handle the MICE business. Now these are all important points, and I would keep a strong thought in your mind about this because you're liable to see this on a future exam. The nature of public facilities are that they're big capital investment, okay? And they have a long-term process to be built. So that's one of the reasons why funding by government and national governments is more common, because it's not easy to get funding on a private basis. But they're also drivers of economic development in terms of affecting other businesses and other activities, restaurants and so on. But they're not a traditional government business, and that's one of the reasons why, as we talk about this further through the semester, we'll be talking about private management of these facilities and the growth of that. And they can generate controversy. As a matter of fact, that the facility that we were trying to expand in San Jose, California, was one of those challenges. And you talk about political liabilities. We had a situation there where we had to have a 2/3 approval by the voters for it to be expanded. And we sat there on election night watching the returns come in, and the reality is we got 65%, not 66%. It didn't get built. To this day, that was 10 years ago, to this day it still hasn't been built. They've come up with other alternatives, but they realized that that wasn't going to be the easiest way. But I'll talk about how those some of the alternatives are later. They are not for profit. Well, I shouldn't say that. They don't make profit for the city. The best you can do is hope that revenue meets operating costs. So therefore, they're also a challenge for cities to justify from that perspective. And some of the But the most vocal advocates, as it states here, concert promoters, hotel managers. Hotels want these facilities because they bring in convention, meeting, MICE business for their hotels. And of course, sports franchises and so on have other activities that can go on sometimes within these facilities. Now, convention center funding in the United States is an interesting one because the majority of these centers are funded by hotel room taxes, or what is called transient occupancy tax. Now, those taxes are designed to pay for the construction loans and the loans to build the facility. They're also used to help fund convention and visitors bureaus at sometimes, and sometimes there's enough money that they go into the general fund, and then that becomes a challenge because the government then has to delineate where that goes, and so they can become quite controversial, and there have been some other steps taken on that basis. But as your notes show, interesting point here is that 2/3 of all convention centers run in the red, and that means that they do not produce a profit. They meet expenses, but they don't produce a profit. And that's one of the reasons why you see more private companies, which again we'll talk about later in the semester, that are now operating these facilities, because these are for-profit companies that come in to operate them for the government. And those companies then are designed to produce revenue for the government that will at least meet operating expenses. Now, the Sands Expo Center in Las Vegas is one that is completely privately funded and the largest privately funded facility in the United States, as you saw from the chart we talked about the other day. And it's connected to the Venetian Hotel, so there's one that is funded privately and owned privately. Let's look at some comparisons. These were done when I was with the San Jose Convention and Visitors Bureau. And I want to show you these because it kind of gives you a little bit of an idea of what we're talking about in terms of size and location and where they are. All these cities are based in the western United States, or predominantly actually in California. They were the competitors of San Jose. And you see there a little bit about the different square footage of exhibit space. There interesting comparison here between San Jose and Santa Clara that I'll talk about more when it comes to the economic aspect. They're right next to each other, and San Jose is more of a national type draw of a facility, whereas Santa Clara is more regional, yet they do compete with each other. But what you should note on the right-hand column is all on one level, with the exception of Las Vegas. Now, if you go back up to San Francisco, when this was done in 2004, that was true, but the new addition that's been built to the San Francisco Moscone Center actually has multiple levels. Now, the ownership and management, and I'm going to refer to my note because this one's hard to read on my computer. What you should note here in the left-hand column is what's owned publicly and how they're managed. The second line of each city there represents how they are managed. So in the case of when this was done, San Jose was public and it was managed public, owned by the city, managed public. Santa Clara, a similar type of situation, Chamber of Commerce actually managing the situation. But going down to San Diego, private, but managed and operated by the San Diego Convention Center Corporation in that case. And you'll see again that Denver is privately managed and Portland is privately managed. And some of those may have changed since then in the process because it is a dynamic aspect in terms of cities making decisions. In fact, we'll talk more on the management side that San Jose is now actually part of an authority, still what you might call public, but it is an authority-managed operation, or part of the authority. Management is part of the authority. When I mentioned the tourism occupancy tax, this gives you a little bit of a barometer here of what the taxes are. Interesting, look at this, is that Las Vegas, which generates the highest amount of occupancy tax of any of the cities on this list, by far. And the funding for the Convention and Visitors Bureau there is what all bureaus in the United States are envious of. When I was in San Jose, we had about a $6 million budget when I got there, and you see we were third there in terms of our occupancy, the percentage. Las Vegas was like 169 million, and no one else was even in three digits. They're all in the 90,000 or less in the United States. I don't even think there are any other at 90,000, so it isn't even comparable. But that gives you an idea there of what percentage of the room rate is being charged in each of these cities for the tourism occupancy tax to fund facilities, to fund marketing, and so on. Now, we've talked a little bit about this before in terms of multi-purpose type facilities and single-purpose type facilities. And based on the size of a city, the larger the city, the more likely you might have single-purpose type facilities. The smaller the city, you would have perhaps the multi-function, because they have to serve the community and others as well. Purpose-built facilities can take a long time to be built. I mentioned the one, even an expansion is difficult to do because there's feasibility studies, there's issues with regards to what's already there, if it's reclaimed land, which was part of the issue that HKCEC faced. There's issues of tearing down old and what's going to happen to the housing and so on. We'll talk a little bit about that later on. And think about this in terms of the primarily in larger cities. This gives you just a little bit of a barometer of gateway, national, regional cities in terms of the size and number of hotel rooms. This next slide, the 10 convention center questions, is from the article that you are assigned for this particular week. And you should be familiar with these. We'll talk more about them, but how will you define the success of a convention center? Should we build it? How will the new center be financed? There's many different ways, as I mentioned, besides tourism occupancy tax. We'll talk about those in a few minutes. How will you get permission from local citizens? Situation I mentioned in San Jose. Where will the new center be located? In the city center, wherever. We'll talk about that when we talk about the New Zealand case study. Who will the market be? Who will manage the building? What will the center's booking policies be? What kind of groups? Do we want national, international? What about local? How are we going to treat that? And who will provide services for the building? Private or public? And what design elements, which is another subject we will talk about next week in much more detail. Situations that have to consider as a success. Remember, almost never profitable, but they do try and meet expenses. Okay? That's a point of meeting operating expenses. But it is an economic catalyst to the city, and it serves as a community center. Keep those in mind. That's an important element as to why one would be built. Success is also measured on other factors. Sometimes we think about things in terms of how many room nights are generated. And if you think about that, if tourism occupancy tax is based on a tax on the number of guest rooms used, then obviously room nights generated are going to help pay for the facility. And economic impact, those are the two largest ones, and then you see it goes down from there in terms of other aspects that look at what the success is. So the reason to build a convention center could be a community development plan. The Moscone Center in San Francisco was certainly one of those. It might be just the positive impact in economic development. Needed locally, regionally, as a center for people to gather, to do meetings and so on. You have to identify the markets for that facility. Is it really one that's going to be able to accomplish what it was set out to do? And I think one of the challenges that we'll talk about later in the semester in the area of the Greater China development is that within China there's been a lot of centers built without really thinking about what the market is. The government wants it. And there can be local enemies, reasons, traffic congestion, higher taxes. In San Jose, one of the challenges we had in the election was people hear tax and they think they're going to be taxed. But in fact, it wasn't them being taxed. It was the people. I'm sorry, I skipped ahead there. It was the people that were staying in the rooms that were going to be taxed, but nobody wants a tax. And can the building generate enough revenue so that it doesn't drain on the government? Now, financing a center, again, many different ways. I won't go into all of these, except I'll highlight one in particular down near the bottom, the special district tax. One of the ways that San Jose went about getting the financing to actually market the center more effectively because they weren't getting it from the tourism occupancy tax, because that had to fund the debt on the center itself. They went back, the hotels did, and they said, we want to gather more money for the marketing. So we will impose a separate tax on the guests and put it into a fund for the government. And you can do that, a special district tax. So just the convention hotels, they contribute an extra percentage. They tax their guests an extra special district tax in order to fund the marketing aspect of that center. So let's summarize this particular topic of funding. What are the primary sources of funding for convention centers in particularly in the United States? I'm sure you've already thought of the answer. If you haven't, go back and look at your notes. Tourism occupancy tax. So why would we build a convention center if it's not profitable? That's a question you should be able to answer for the midterm. So think about that. That could very well be a question that I might ask. Okay, that should end this particular lecture.